Good evening, everyone. Hope you all are doing well. So, as we have discussed in the yesterday class, that today we are going to solve the last questions of the September-December 24, which is question number 3, Bodeen Company. And most probably, this will be the last practice questions of September 25 ACCA AAA exam session. I hope you all will be passed in your upcoming exams. But as we all know, learning should never stop. So after your exam, we will again meet via this platform and we will discuss more important and professional things as well. So this is September-December 24 question number 3, B company, Bodeen company. In this question, there are 3 parts. Part A is about the challenges using data analytics. Part B is about the quality, ethical, and professional issues. And part C is about the critically appraise the audit report. Let's read the overview, then we will read the requirements and then the exhibits. It is 1st July 2005. You are an audit manager in Burton and Company, a firm of CCA. Your role includes performing post-issuance quality reviews of completed audits within your firm, and you have been asked to review the audit file for Bodeen Company for the year ended 31st January 2005. You are also currently working on the audit of Frescia Company for the year ended 31st March 2005, and you are in the process of reviewing the proposed auditor's report. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Post-issuance review of Bodeen Company. Post-issuance review findings from the audit of B Company. Frescia Company draft opinion details regarding a modified opinion proposed. This information should be used to answer the question requirements within the response option provided. Let's read the requirement first. Part A is about the discuss the challenges associated with the use of data analytics in performing external company audits. You do not need to refer to any exhibit to answer this question. Similarly, we have solved one question in the yesterday lecture. In question number 2, there was a question on the sustainability, like why materiality is significant for the sustainability. In that question, you also have to use your general knowledge. Now, in the question number 3, part A, the similar case is also there. First of all, before starting the challenges associated with the data analytics, let me tell you why data is very important and how it helps the auditor. As we all know, data analytics has become one of the most powerful tools for auditor, especially with business handling large volume of transactions and complex systems. If we talk about the revenue, in the revenue, there are significant ample amount of transactions. If you guys have watched the block 1 lectures, and in the block 1, I have discussed about the revenue related things, why revenue is considered as a significant area. Also, how data can help the auditors. If we know that as an auditor, we work on a sample basis, as it's not humanly possible to check all the 100% transactions. If I talk about the sugar warehouse, let's say you are in the sugar warehouse and there are thousands of curtains. So how will you ensure that the all curtain or boxes contain the sugar? Maybe there is a possibility that there should be another thing apart from the sugar. So how will you ensure these things? Of course, we can't because we perform audit on the sample basis. But through the data analytics, you can full population testing. You can do the full population testing rather than just a sample basis. Also, traditionally, auditors relied on sampling basis, but with data analytics, you can analyze 100% of transactions, making testing more reliable and reducing the risk of missing anomalies. Anomalies means one-off errors. Also, it will help you in identifying the risk and outliers, as analytics can highlight unusual transactions, especially in case of fraud, such as duplicate payments, embezzling receipts, or dollar transactions. Also, it will help you in efficiency and time savings. Through data analytics, you can do their difficult work in few seconds or minutes, as it will automate repetitive testing. We all know in the audit there are so much repetitive work. If you are performing a bank reconciliation or journal entry testing or matching invoices through the data analytics tools software, you can do these testing within seconds. As an auditor can spend more time on judgment and professional skepticism. These are the two fundamental principles of an auditor. Now, through the data analytics, instead of manual checks, auditor can help with the data analytics. Also, it will help in improving the audit quality that will help the auditor in maintaining their professional liability. Also, it will give you the better client insight. Let's say if beyond compliance, auditor can provide value added insights. So now we have discussed how data analytics helps the auditor. Now let's also go through why it's important for the auditors. If I talk about the regulatory and market expectations, such as regulators encourage the use of technology and analytics for better audit quality. Also, it will help you in handling the big client data, fraud detection, competitive advantage, one of the most critical factor, you can say key to success factor, or support professional judgment. So these are the few things that data can help the auditor. Now move to the question. The question was challenges of using the data analytics in audit. Every individual judgment is different, so your answer might be different from my answer. So don't worry, it's all based on the judgment. How much information do you have about the data? So based on that, you have to write your answer. Let's go through the brief overview. Challenges of using the data analytics in audit, such as data quality and availability. As client data may be incomplete, inaccurate, or inconsistent, which usually happen in the manual audit as well. Also, there is a possibility that the client uses different system and there is an issue of integration as well. Also, auditors should have to spend too much time cleaning and reconciling the data before analyzing it. Now, data access issues. We all know in the manual audit or in the conventional audit, client sometimes does not provide the information, and based on that, we have to revise the opinion that this is a scope limitation. Similarly, in case of data access issues, client may restrict access to sensitive data due to confidentiality. Also, auditors sometimes can't get full population data such as banking transactions or legal system as well. Now, technical skills gap. This can be one of the most challenging issue. Why? Because there is a possibility that the audit team may not have sufficient resources or may not have competency. Also, high implementation costs such as software license, IT infrastructure. Now, over reliance on tools can be risky. How it can be risky? Let me give you a few real world example. Let's say after introducing the chat GPT, as the chat GPT is improving further, now chat GPT 5 is upcoming. Most of the professionals can upload the important documents of their firm or the client on the chat GPT. So what do you guys think? By uploading such document is ethically correct or not? No, it's unethical. Why? First of all, it's an important information you should not disclose. You have to be confidential. By uploading them on the server, it means your data, your confidential information is now can be read by the entire world. So they based on that over reliance on tools risk that the auditor trusts the system outputs blindly. Also, analytics highlights anomalies but does not explain the reason. The most and the significant issue is the regulatory and standard gap and cybersecurity and confidentiality risk. So these were the issues which an audit firm can faces. Let's move to the answer slide and let's see what could be the answer of this question. It's a Frescia company September December 24 past paper. Now there are important points which you all know I have been listed down throughout the past paper series. After that we have professional marks. If any student want to get the professional marks then you have to read it. Now we have an answer. Challenges. The sum challenges associated with the use of data analytics in performing external company audits are. The first one is data quality and integrity. There could be instances or possibilities in which an audit client's data being inaccurate or incomplete. So when data analytic process is performed over these inadequate data means incomplete data, the analytical process provides meaningless interpretations and conclusions which will eventually affect the quality of the audit, which we have just covered in the general discussion. Now, restriction in access to data. There could be confidential data in the management system. Yes, it is. So, the management has concerns that by performing data analytics over these data, there could be leak or of these data which could affect the client's competitive position. So, the precondition of audit could be violated. Now, compatibility issues. Yes, this can be one of the most important. So, compatibility issues is the major issue in the data analytics. There could be compatibility issues when data analytics system of audit firm interacts with the multiple system of the client, which result in difficult application of data analytics process, which increases the risk of oversight. Training and competence. Yes, you have to ensure that the audit team member have the competence or not. The members of the audit firm might lack sufficient expertise and competence in performing data analytics in the external audit, which results in efficient audit. So firms should train their members before applying data analytics. Data privacy and leak means confidentiality issues, breach of confidentiality. As data analytics goes deep into the client's data, there could be data privacy threats and risk of leakage, cybersecurity threats or issues. So in such case, the professional liability of the auditor would significantly increase and also has to face the legal consequences. Costly, yes, it is. Data analytics are costly to implement and apply, and technologies in respect to the data analytics is being upgraded in regular interval. So firm has to incur significant cost for maintaining appropriate data analytics software for efficient conduct of audit. So now guys, we are done with the part A of question number 3 regarding the issues or challenges faced in the data analytics by an external audit firm. So now we will going to start part B, which is about the ethical and professional issues. Let's read the part B requirement. Evaluate the quality management, ethical and professional issues raised by your review of the audit of Bodeen Company and recommend any appropriate actions to be taken by the Burton and Company. For that, you have to read the Exhibit 1. Look, it's written. Let's read the Exhibit number 1 and pick up the important issues. This is B company is a listed company. Please highlight this thing, which provides IT services and is a new client and additional information. Whenever it's a listed and a new client, so of course, new client, we do not have competence, we do not have experience for this kind of client. We have to ensure. Also, the listed means high regulatory issues of Burton and Company. You have identified the following matters in your post-issuance review of the audit of B Company for the year ended 31st Jan 2005. The auditor's report was signed on 31st May 2005. Use of automated tools and techniques, data analytics software during the audit. Please guys be attentive. This can be a little tricky for you. B Company's audit committee was supportive of the use of Burton and Company's data analytics software during the audit. Yes, every audit firm has their own software. If I talk about the KPMG, they have a Clara. If I talk about the Deloitte, they have different software. PwC have different, and EY also. The audit plan started that Burton and Company would utilize the firm's data analytics software to carry out testing over the completeness and accuracy of B Company's revenue. So what do you think? There is an integration issue or not? When reviewing the audit file, you notice now the important points come from here. You notice that a lot of the working papers in relation to the procedures performed on revenue comprise only a printout from the data analytics software. Means they just print out the template from the software and on that there is no such work has been performed. With the handwritten conclusions appears reasonable at the bottom of each page. The audit assistant told you that neither they nor the audit supervisor really understand what the firm's data analytics software does. This point affects the competency issues. But they followed the directions in the instructions manual for audit testing and put the results on file as evidence. Now, engagement quality review. As B Company is a listed client, an engagement quality review occurred before the auditor's report was signed. Yes, we have studied in the ISQM 2. The engagement quality reviewer EQR had raised concerns that insufficient evidence had been obtained and documented in respect of opening balances in the first year of the client. Means if it's a new client, then there is a risk of opening balances as well. We have covered this thing. And comparatives. They had recommended that the auditor's report was not signed until further procedures had been performed in this area. During your additional post-issuance review, you noted that the only evidence obtained with respect to opening balances was to agree them to the prior year financial statement. It's just a tick and check based audit. And to confirm that the previous auditor was a firm of CCA. This had not been updated following the engagement quality review and the auditor's report, which included an unmodified opinion, was signed on 31st May 2005. After all these issues, the opinion is unmodified. The EQR had also highlighted that the audit strategy started that the results of the testing performed using the data analytics software would be reviewed by a member of Burton and Company's specialist team of IT experts. but there was no evidence that this review had occurred. Again, an issue. You have since worked with the audit team to assure yourself that the financial statement do not contain any material misstatements in relation to the opening balances, comparative, and revenue. Let's move to the answer and see how to draft an answer and link it with the exhibit. So this is part B, quality management, ethical and professional issues. Assignment of audit team. The engagement partner for the audit of Bodeen Company has the responsibility to assign appropriate team in appropriate areas of the audit. Yes, this is the responsibility of an engagement partner. If you have covered the ISQM2, then you have better understanding. Revenue is presumed to be the risky area and data analytics would detect issues efficiently. However, the team assigned, including the audit supervisor, is incompetent. You know why they are incompetent? Because it's written in the second paragraph that the audit assistant or the supervisor have checked. If incompetent to undertake data analytics process and to interpret the results from the trends provided by software, they just get a copy from the data software and do the tick-based audit. In addition, engagement partner and manager also fails in supervising and directing the audit team, as an audit team just followed the manual for reaching a conclusion. Means there is no professional skepticism, there is no judgment. As a result, any misstatements remains undergone undetected and quality of the audit has been compromised. In audit, using new software is risky area. Partners should have assigned audit manager who is competent in use of data analytics and should provide appropriate consultation to the team in contentious matters for better audit. Opening balances and previous auditor. You can write two separate headings on it. From the EQR review, it is defined that proper evidence hasn't been obtained in respect of opening balance and comparatives. Since B company is a new client, opening balances will be considered as risky area in the audit plan. Why? Because the last year audit is performed by another audit firm and we all know last year closing balances will brought forward to the current year opening balances. So that's why when we are assigned to the new audit client, we also should have to confirm the appropriateness of the opening balances as well. In respect of prior year auditor, audit team only confirmed that they are chartered certified accountants. However, this only proves that previous auditors were competent. However, it doesn't provide any information regarding their independence while auditing and experience. This is how you have to cover every aspect of the exhibit. If they are not independent or experienced, then the opening balances could be materially misstated. So it seems that partner again failed to fulfill his responsibilities in assigning proper audit team. Instead of this, audit team should have reviewed the prior year working files to confirm appropriate audit procedures has been performed by previous auditor, which confirmed that opening balance is true and fair. Now, failure in updating to EQR. As per ISQM2, EQR is mandatory for the listed client. Since Bodeen is listed, assigning EQR reviewer was appropriate. As per ISQM, audit report should not be signed unless it is reviewed by the EQR. Audit report. However, even though EQR asked to obtain further evidence in respect of opening balance, the audit team didn't update it back to the EQR and didn't perform procedures and issued the audit report without the signature of EQR. The audit team again violated the ISQM2 standard. The audit team should have been followed the instructions of the EQR and gather sufficient evidence to reach an appropriate conclusion on the opening balances. Now we have last point, failure to rely on experts. ISQM standard emphasize on the importance on considering whether expert work is required for efficient conduct of audit. Since the team is incompetent, if you are not competent, then of course you have to rely on the work of expert. But after checking the ICED criteria to analyze data analytic result, the audit strategy included to use the work of Burton Company's specialist team of IT expert. In this case, the expert is the auditor's expert. It's not the management expert, it's the audit firm expert. However, there is no evidence regarding the same. This implies that either audit team did not consult the IT expert for review, deviated from plan, or failed to document the review process. If deviated, the reason has not been communicated to the EQR. As per ISQM, documentation is required for the audit work to use as evidence. However, audit team failed to comply with the standard, resulted in inefficient audit and compromised audit. Now, in the end, we know if there is an evaluate, then we have to give a conclusion. There has been several breaches of ISQM standards, such as partner failing to fulfill his responsibilities regarding the appointment or proper assigning, improper documentation, and so on. Therefore, it seems that B company might issue an incorrect audit opinion and might have to face the legal consequences as well. So this is your conclusion. Now, read the part C requirement first, then we will move to the exhibit 2. Critically using the information in exhibit 2 in relation to Frescia company, critically appraise the extract from the auditor's report, including an assessment to whether the proposed audit opinion is appropriate. You are not required to redraft the extract. Okay, so now it's clear. You just have to critically appraise. You have to highlight the shortcomings. The paragraph looks big. Okay, let's see. Oh my God. Okay. You are also reviewing the proposed auditor's report for Frescia Company, a publisher of printed magazine titles, for the year ended 31st March 2005. Frescia Company is an unlisted entity, and its draft financial statement for the year ended 31st March 2005 report profit before tax of $54 million and total assets of $970 million. So these figures are given you for the materiality. Materiality for the audit. Now, examiner also gives you the materiality, so no need to calculate the materiality. The materiality for the audit was set at $4.85 million in line with Burton and Company's internal quality procedures. The publication titles which have been externally acquired by the company are correctly capitalized as intangible assets and are not amortized, as management consider the titles to have indefinite useful life. Do you think it's correct? Publication titles have indefinite life. No, it's not. As required by IAS 36, impairment of assets, an impairment review of each title is performed annually. Revenue from many of the titles has decreased over the last 2 years. Look, mostly due to the increase in free internet publications. Many of the impairment reviews performed by management show very little difference between value in use and the carrying amounts of the titles. The audit team has assessed the impairment reviews performed by management and expressed concern at the sensitivity to key assumptions relating to future sales and the discount factor used. Management has based their impairment reviews on what they consider to be best case scenario, where the audit teams Okay, where the audit teams used worst case scenario to be prudent They have estimated that a total impairment of 6 million exists. The management of Frescia company started that this is a result of a difference in judgment and has started that they will not amend the financial statement. If there is a misstatement and the management is not going to amend it, so what will be the implication? Can anyone tell me? So, of course, you have to modify the opinion. Okay, guys. Other than the issue of the impairment review described above, sufficient and appropriate evidence has been obtained to support that the financial statements are fairly presented in all material respects. The audit supervisor has drafted the following extract of the basis for opinion and opinion paragraphs to be included in the auditor's report in response to this issue. Now be attentive because from these paragraphs we will critically appraise it. Now, opinion. We have audited the financial statement of Frescia company, which comprise the statement of financial position, statement of comprehensive income, statement of changes in equity and cash, statement of cash flows for the year, then ended and notes to the financial statement, including a summary of significant accounting policies. So this is the standardized wording. Except for the limitation of scope described below, we believe the accounts for the year are true and fair. No, this is not a proper wording. Now, basis for limitation on scope. If you notice one thing, it's just a simple heading regarding the opinion, nothing modified, nothing qualified, and nothing related to unmodified. So you have to comment on it as well. After that, you have to comment on the paragraph wording. Now, basis for limitation on scope. As part of our audit, we were required to review management assessment of impairment of magazine titles. Using a less optimistic set of assumptions than management, we found an impairment of $6 million was required. Management has refused to record impairment losses as they disagree that these are less optimistic assumptions should be used, as we are unable to prove their assumptions regarding things which will happen in the future. We have experienced an ability to obtain evidence leading to a limitation on the scope of the audit in this regard. This is not scope limitation, this is a misstatement, material misstatement. We conducted our audit in accordance with ISA. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our qualified opinion. Again, this is not a proper wording because there are few important lines which have been missing from this paragraph as well. Okay, the only important thing with regard to this kind of questions, you guys can only get full marks in these questions if you have read the report structure and the paragraph drafting. In the block 3, the lecture on the audit opinion, I have explained each and everything with respect to the audit report. So still you have time, you guys can go through that lecture, even though I will attach a link of that particular topic here and there so that you can watch it later. Now guys, we are done with the paragraph and with the exhibit number 2. Let's critically appraise it in the answer sheet. Critically appraise headings. The heading of both opinion and basis for opinion in the proposed audit report of Frescia company is incorrect since it is qualified opinion The title of para should have been qualified opinion followed by the para basis for qualified opinion. Means qualified opinion comes, then basis for qualified opinion. Now opinion para. In the opinion para, there is incompleteness in the component of the financial statement as there is no mention of a statement of P&L. The auditor also failed to state whether they were able to obtain all explanation and information. These are very tricky lines which only those students can pick if they have read the report. And information required for the conduct of the audit, which is one of the preconditions of the audit. Basis for opinion. The basis for qualified opinion para should have started by starting that they conducted audit in accordance with ISA instead of explanation for the audit opinion. Yes. In basis of opinion para, auditor failed to mention whether they were independent as per IESBA International Ethics Standard Board of Accountant and complied with the ethical requirement during the audit of Frescia company. Here the statement of unable to obtain sufficient appropriate is not valid in the basis for qualified opinion as it statement used in the basis for disclaimer of opinion. Here auditor has estimated appropriate impairment of 6 million, so there is evidence. In addition, this statement contradicts with end of basis for opinion para obtain sufficient and appropriate to provide basis for opinion. So now guys, we are done with the part C as well, and here the conclusion of the past paper lectures. I hope I have explained and guide you in every aspect. Instead, if any of the student facing issues or there is a feedback from you guys, so please try to comment down. I will try to improve the shortcomings if you guys feel any shortcoming in my lectures or in my notes. Now there is an important note for you. This is the last practice questions of September 25 ACCA AAA exam. I hope I do the justice with you guys throughout the session. As promised in the start that I will cover each and everything, so here my promise is complete. As I believe learning should never stop, so see you the new students. Hope you all will pass. After September 25 attempt with lots of new things. So these new things will also for you. It's not related to AAA syllabus. Of course, you all guys will pass inshallah. And practical audit course as well. So stay tuned. I am again repeating if any student is still facing issues. So take care and goodbye.